We're live. Are we focused?
There you are.
Okay, now we are. Okay, hi everybody. It's Cori with Royal LePage in Cold Lake, and I'm here today with Wendy Coats and Jenny Perras from RBC. And Wendy is the mortgage specialist over at RBC, and Jenny is the financial advisor. So I thought it would be a great Ask the Expert to sit down and talk with them about their products and the economy and just sort of everything that they can kind of offer as a whole. So I think we'll start with you, Wendy, because everybody wants to hear about mortgages, but I think actually everybody wants to hear about the economy too. So we'll just go with it. Anyways, so Wendy, first things first, like let's talk about your position as a mortgage specialist and how that makes you different from like say banks and things like that. So
first and foremost, the fact that I am only doing mortgages. So I work with a great group of colleagues that we specialize in different areas, such as Jenny as an investment retirement planner. But for me, I specialize in mortgages. That's all I do. So that's kind of my specialty, and I offer competitive mortgage rates, flexible financing solutions. I'm mobile, so I can meet with our clients anywhere, anytime, whatever's convenient for them.
So similar to my job in a sense, like if you had to go to their house, like what sometimes I have to do, then that being a mortgage specialist, that opens up the opportunity for you to do that. So it doesn't always have to be a formal setting coming into the branch.
Absolutely. It is not a 9-to-5 job.
No.
you know first and foremost that this is evenings and weekends as well.
Yeah, so, okay. Yeah. Perfect. Good to know. Also, are we able to talk about some of the unique products that RBC has, offering for mortgages right now?
Yeah, obviously the conventional mortgage, so just your standard mortgage, fixed rate, variable rate. We also have products that are good where if you've got equity in your home, we have a home line plan. So you can use some of the equity in your home and it's attached to a secure line of credit. We've got different programs that are for medical and dental professionals, first-time home buyers. We've got products such as Purchase Plus Improvement, which means that if you are buying a home, you don't like the cabinets, you don't really like the carpets, something about it, shingles, you can also include that in your mortgage. So I've actually done that one before where we gutted everything down to the studs, and so it was really cool. Like we had our contractors go in beforehand when we wrote up the offer, and they gave us a full-on quote. They outlined everything that they were going to do, so we paid for it up front, and then what happened is that once it was all done, we submitted all of our receipts along with that quote, and then the bank just reimbursed us for that. So it was really awesome being able to work that into our mortgage, and that's such a great program. Especially, sometimes we see here when we're going through some of the houses and people are saying like, I love everything about the house, but I don't like the cabinets, or the flooring would need to be changed, or like you said, shingles. So I think that this is such a great program because it doesn't, if your house doesn't tick all of your boxes, you can make it tick all of your boxes. That's which I really like about that. Yeah. Another one of the unique things I want to mention is mobile home mortgages. We are one of the very few financial institutions that will do them. Okay. So as you know, it's under our default insurance program. So definitely something to mention, because I know the mobile homes that are listed here in Cold Lake, a lot of our first-time home buyers or people that are looking for something that's a little more low maintenance.
Okay, so and that, just to clarify, that is mobile homes that are located in a park, but also mobile homes on land. Is that correct?
Yes.
Perfect.
Absolutely.
Okay, good to know. Really good to know. Because actually with mobile homes, because they're considered a chattel, sometimes that is hard to get the financing, and not all banks will do it, right? That's right. So it's good to know that RBC will. Can we talk about the current stress testing? I know it's kind of like the elephant in the room, but that being said, I think people really want to know about it, right? So how is it affecting, your personal experience when it comes to, getting approvals and things like that?
Yeah, I was worried about it to begin with. Wasn't sure how big of an effect it would have on my clients, and honestly, it's been a handful. Most of our clients that come in they've got great credit, they've got a down payment, they've been able to qualify. There's really only been a handful of clients that personally for me it has affected. So it's very hopeful that it's, and it is meant to protect the clients.
Yes, absolutely.
So it really hasn't had a huge effect on my business, which is great.
So what it's basically saying is that they're not going to charge you that specific rate, but in the event that rates do go up to there, they want to make sure that you're protected and that you can actually keep your mortgage payments moving forward if the rates actually do ever were to reach that.
That's right.
Interest rate.
It's not what you're paying, it's just what you're qualifying.
It's just what you're qualifying at. That's good to know. So, like, this is really great. I love sitting down with everybody. It gives me valuable information, and it gives, whoever's watching valuable information. So, like, kind of to close off, your and I's chat, what do you want people to take away from this? Like, what are you hoping that people get from this interview?
I want to let them know that RBC isn't about just pushing that product. We're about the advice. We've got a holistic, we can wrap our arms around you and help you with every part of your banking.
Right.
Your investments, your lending, your home financing needs. I mean, it goes as far as, we've got different divisions of RBC, so give us a chance. And also, the incentives.
Yeah, you know what, that was funny. I was just about to mention that because I skipped past one question. So, and this one is kind of cool. Like, what kind of incentives do you have to bring in sort of new clients and attract new people to come to RBC? Other than, the products available to you, do you guys have any incentives going forward? And
we do. It's an exciting time to get a mortgage at RBC. So if you are a first-time home buyer, you qualify for a $750 cash back. So that goes right back into your bank account after a few weeks after it funds. So that's the date for that was March 1st it started until June 30th. So anyone who gets a mortgage or qualifies during that. So even if they start an application on June 30th, but they don't say move in till August, September, they still qualify for that cash back.
Okay, good to know.
Absolutely. Also, switching in, if you've already got a mortgage, $750 WestJet gift card for switching in your mortgage to RBC from another financial institution.
So switch in your mortgage, go on a vacation.
That's right.
I like it. I like it. Absolutely. Okay, perfect. Well, thank you so much.
Thanks
that's so knowledgeable, and I really, really appreciate that. So let's chat with Jenny now, because Jenny, she is our financial advisor over here at RBC. She's given me some great advice, and everybody kind of wants to know sort of what the economy's doing, and how she can help you kind of grow your personal wealth moving forward to help you sort of plan for your retirement. And I think that that's super important, especially with the change in the economy over the last couple of years. I don't think as many people were thinking about it that back then when cash was rolling in. Now that our markets and our economies have sort of started to shift, I think people are starting to take a step back and go, wait a minute here, let's see, I want to make sure that I can retire at a reasonable time, right? So I think that that's super important. So, same thing that I asked Wendy over here, like talk to me about your position and let me know what your kind of job entails.
Okay, so as a financial planner, and it's a big difference when we're talking planner versus advisor.
Right.
So often advisors are there to kind of give very specific advice around maybe investment solutions. As a financial planner, we're educated and we're trained to follow 8 different disciplines, and that's tax planning, it's investment planning, it's retirement planning, and retirement income planning.
Okay,
it's estate management, it's debt management, it's everything, right? And so a lot of that and risk planning, right? Ensuring that clients are getting in touch with their insurance advisors and such so that they can get proper guidance around ensuring that they're going to be taken care of if something happens.
Right.
So here at RBC, we help clients plan for different goals like retirement, and we assist them through different life events like that death or job loss, which we have seen a lot of over the last few years, unfortunately. And any other big life event, we'll take into consideration those 8 disciplines and where we can get specific advice to them around those areas and ensure that we're connecting them to somebody who can, if they don't already have that person there for them.
Perfect.
Like a tax specialist or an insurance specialist.
That's awesome. So, if they come to you, you can help them, but you can also help them get in touch with people as well.
That's right. Yeah, we want to make sure that they're taken care of in all facilities.
That's perfect. Absolutely. Okay, so let's talk about our economy. Can you tell me how Alberta is doing in the scheme of things? As well as, is there any projections over the years? Like, I know we had you in a couple of years ago and we had this conversation. You did a big presentation, which I would love for Jenny to do now, but she doesn't have the time. But that being said, like, that information was gold to us, because at least, we're getting questions all the time. Like, what's going to happen in the future? Is the real estate market going to turn around? And like, I know you don't have a crystal ball, but I'm sure that there is some sort of projections at least, right? So.
Yeah. So, I mean, you know what? 2019 is going to be a big year, and it's going to be when we were looking at this, we had just finished our federal election and we had just had our provincial election, and now we're looking into a year where we're having both the provincial and the federal election.
Yes.
And so with that is going to come quite a bit of uncertainty, and we're going to see that uncertainty like potentially fall in over the markets.
Okay.
And so that's like having a crystal ball, like if anything was further from the, like, you know, like furthest from us knowing, like this year would be the year that we just really don't know what's coming.
Yeah.
You know, with all the different elections. So the biggest piece of advice to people is, you know, be diversified in your investment holdings. Make sure that you're getting lots of advice. And, you know, if you're invested for the long term, and even if you're invested for specific goals that might have a shorter term than, you know, 10 years plus, just make sure that you're seeing the forest through the trees. So, you know, there might be market volatility coming this year, but just ensure that you stay on track, that you're talking to your advisor or your planner, and, you know, we're all there to help you through it and to give you the advice step by step.
And I think that's key. Like there's a couple of years ago, even, you know, when the market started to shift and everybody was sort of like, it was job loss, job loss, job loss. I came in and I sat down with somebody and I said, okay, if in the event that my husband loses his job and I am, you know, a contractor, so, you know, I'm on commission sales, what can we do to help save us cash money right now? Absolutely. So we sat down with somebody and they gave us several options so that if and when that did happen, we were ready to make those decisions immediately because we already had the information on hand, right? So we were being more proactive than reactive. And I think that that's super important for people too, to be proactive with your finances.
It is, and especially in this market right now, we've seen, because of so many job losses, people are actually a little bit gun shy about coming into the bank. Right. They feel that they need to have money to give us in order to come in and get our advice, and that's not necessarily the issue. We want to ensure that we're helping them through that job loss, that they're getting the right information.
Exactly.
So that way they're not sitting and maybe pulling their savings a little too early. We want to make sure that, you know, we're strategizing with them and ensuring that everything is set up and in place to help them.
Perfect.
We're there to help and give the guidance and give the advice, so
awesome.
they're not in it alone.
Yeah, exactly. I think that that's really important to mention to people too. Like, this is what you guys do for a living. That's like, come in, talk to you, and like worst case scenario, you're no better off, but at least you have information moving forward so that you can make informed decisions. And that's what I always tell my clients. That's what my job is, right? So, okay, so like talking about a balanced portfolio, because it's something that you just kind of mentioned. Your client has invested in real estate and now they want to balance things out into looking into some sort of other options. What is a good way for clients to kind of get their feet wet on the investing side of things?
So really, people that are looking at getting into investing is to come in and meet with a financial planner, get some education around investing, as well as ensuring that you're getting the proper investment advice based on what is right for you as the individual, and that particular goal that you're saving towards, or you know, even if it's retirement, what's good for one person might not be good for another.
Right. Okay. Perfect. Yeah. Like, I mean, my husband's a big stock guy, so he always is watching, you know, BNN Network and things like that. Is there any blanket or ones that you would recommend, or are you sort of more just on the, you know, if each case is kind of a different case?
Every case is individualized. So what might be good for Wendy might not be good for me. It's all about how long you're wanting to invest for. So when is that goal happening? You know, is it in 5 years? Is it in 2 years? Is it in 10 years, 20 years? And then really how you feel about the risk. So if your investment time frame isn't for another 10 years, but you're really, you know, maybe seeing your money go up and down significantly kind of irks you, you know, that might not be good for you, but it might be great for somebody else. So it's so individualized, and there's so many different investment options out there, thousands upon thousands, and so really it's going to be unique to that individual.
That's definitely a talk in my household, because I'm more of a safe, whereas my husband's like risk.
Yes.
And you know, some people have said, you know, well, you're young, so if you're going to do the risk, do it now, right? But that being said, I'm still like, I like my money.
And you know, more so than anything, it's about time in the market.
True.
So, you know, invest early, and it makes a huge difference in terms of like what your total outcome is going to be.
Well, even my RSPs, like when I started mutual funds and RSPs when I was 16. My parents were like, just get it done, $50 a month. Like, you guys, you're working a part-time job, it's $100, it's $50 a paycheck. throw it in. And it's crazy how much that has actually grown since 16, just throwing in $50 a month.
That's right.
I mean, of course, as I got older, I contributed more, but that being said, even having that jump start to be able to do that, because I mean, Wendy, we can kind of chat about this too. Like, there are options for home buyers to be able to pull from their RSPs to be able to get a down payment on things too, right?
Yeah, absolutely. So, they can do $25,000 per person on the mortgage.
So that's up to $50,000 for a couple. So I mean, and is it? I'm not really too sure exactly, because maybe it's changed since I was a first-time home buyer, but what's the time frame to pay that back?
15 years.
So that's extreme. Yeah.
And you don't have to make that first payment back until the second year after you pulled it. So if you pulled in 2018, you don't have to make that repayment back until 2020.
Okay,
and
that's
you would,
really cool.
Would you give the advice of don't rush to give it to pay it back? Use that time. And if you've got extra money to put in,
you can offset that for your tax
so
return.
It's not a big rush in saying, oh, I want to pay back. Don't pay back the government early.
But you still want to pay them back in case anybody from CRA is watching this.
And worst case scenario, if you happen to miss a payment one year, say you were out of work, that we saw so many people, and you can't make that payment back, that money had to go to other more important things. All that's going to happen is that piece that you missed is going to be then taxes applied.
Right.
It's not like you're going to owe money on the entire lot or anything big and detrimental is going to happen. It's a very small taxation. And so, I mean, it's like, it's definitely worth utilizing that.
Yeah.
And as well with that home buyer's plan, your RSP can also be used for a lifelong learning plan. So you can actually borrow money out of your RSP to pay for future education. So if you wanted to upgrade your power engineering ticket, or if you wanted to go back to school to get into another profession, you can borrow up to $20,000 out of your RSP. So
I never knew that.
Yeah,
that's cool.
So you have to take it, I believe, 2 years consecutively. So it's about $10,000 per year that you would utilize, and after the 2 years is up, then you can start paying it back, and you have about 10 years to repay it.
And I think that's, again, it goes back to like what we were talking about before, where I think it's important to come in and talk to you guys about that, because I didn't know that, and I'm like so involved with my banking, and I had no clue. So there's a lot of product and programs that especially RBC offers that if you were to come in and if say you did lose your job and you wanted to upgrade, then there's an opportunity for you to pull through from your RSPs to be able to, change professions or whatever, so that you can go on, being able to provide for your family, right?
That's right.
So absolutely.
Free advice.
Yes, I know. I'm loving this. I'm loving this. Yes.
And financial literacy for your kids, I mean, it's huge. So where your parents were talking to you, some parents kind of hesitate from doing that. Bring them in, get them on that savings train, because the earlier they get into the habit, the better off they're going to be.
Well, and the truth of the matter is that my parents didn't have the money to be able to provide me with RESPs and things like that. So they taught me really young, you better start saving, because if you want something in life, you're going to have to pay for it.
That's
so just deal with it now, and you'll be better off later on. And I think that's so important for us to teach our kids. Like, I mean, I was able to provide my daughter with a little bit of RESP, but that being said, like, I'm not going to give her the keys to the kingdom, right?
That's
like, you need to go out, you need to work, you need to pay, and that will get you further ahead in life, right? So I think nowadays our kids are getting to the point where they're just so used to having things given to them, whereas that wasn't the same with our generation, right? So is there a minimum amount of money that potential clients have to invest with you? Or?
Not at all, no. If you have $25 you can save per month, and you have the will to want to save, and you want that advice, and you want that help, come in. We're here to help. We're here to get you on that path. We want to ensure that everybody's getting it. We all work equally hard for that $25 a month, right? So whether or not you have $1 million, or whether or not you only have like $25 to start, we're going to treat you the same. We're going to make sure that you're taken care of. We're going to make sure that you get the right advice, because really, at the end of the day, like, no matter how little you were able to save, that you worked hard for it, and you deserve to make sure that you're taken care of.
And I think that goes for any age. Like, I'm sitting here and my wheels are spinning. I'm like, okay, I'm bringing my 10-year-old in with her $25. Oh, geez, should we drop that? I got a little excited there. Yeah. Oh my God, that's too funny. Let's get this set up again. Yeah. With her $25. Okay, so like I asked Wendy as well, what do you want? Let's scoot over so Wendy's in it again. Sorry, I had a faux pas there.
That's all right.
So what do you want people to take away from this interview?
That we're here to help. To build on a lot of what Wendy said, we have so many different facilities within RBC that we can help you, and we have so many partners that we can rely on. I'm constantly referring over to Wendy to ensure that our clients are getting the best advice, because purchasing your first home or purchasing any property is such like a big investment, right? So I want to make sure that they have the best enabled expert in front of them to give them all the details that are in there, right? So with that, like, we're here to help, we're here to give advice. We really want, we really have this great platform at RBC that we're just launching. Most of our clients, we're signing them up for. It's called My Advisor. Yeah. The beautiful part about this, and similar to Wendy, I'm mobile, and I go up to St. Paul and Lac La Biche to see clients.
Which Wendy does too.
Yeah, that's right. So now we're launching this platform called My Advisor, and it's a digitally enabled platform to put our clients more in the driver's seat of their financial goals. Yeah. And it kind of is like a living, breathing financial plan, so they can kind of see how they're progressing towards their financial goals. Every day they can upload outside accounts. So we have pensions through Sun Life. We can connect those to our My Advisor, and it shows us how we're trending now towards our investment goals for retirement, and it takes that into consideration. We're also able to set accounts up, as well as make investment allocations and things like that, all while the client is sitting in the comfort of their home. So if we have clients that are 150 kilometers from the closest branch, we're now able to serve them by being face-to-face with them through video conferencing and telephone conferencing and all those different avenues. So it's making it really, really easy now to deal with us, which is great.
And you kind of mentioned this too, and this is why I wanted to sit down with both of you, because I feel like investment as a whole goes hand in hand. So like, and it took me a while to kind of click into this too, because I'm in real estate, so I've always been so real estate driven. Mm-hmm. And so, it like I was purchasing property and things like that, but then I kind of took a step back and I had a look and I said, wait a minute here, like I have all my eggs in one basket. And so I thought it would be a really good idea to sit down with both of you, because I feel like your jobs kind of go hand in hand, and that, it is a good idea that when you're thinking about purchasing a new home, it is a good idea to sit down with you as well. Mm-hmm. And, say, okay, we've got the house figured out, Wendy's got you covered, and now let's sit down with Jenny and be like, okay, what do we need to do for the rest of our financial planning? Because markets with real estate go up and down. That's and right. Also with, stocks, bonds, all that stuff, mutual funds, all that stuff, they go up and down too. So how do you maintain that healthy balance? And that's why I wanted to meet with both of you together.
Yeah. And really at the end of the day, it's all about making sure that you're, while you're paying off that mortgage debt, that you're also putting into that savings, right?
Right. Yes. Yeah. Appreciate that. All right. So that's our Ask the Expert today. Thank you for tuning in, and this will be available. Sorry, Wendy. This will be available on my YouTube channel, and I think Jenny and Wendy are both going to share it as well. So if you want to come back and sort of take a look at what we've talked about today, then we can kind of, that. And then if you have any questions about, buying a home, contact me, contact Wendy, or, if you have any questions about your investments moving forward in other avenues, definitely give Jenny a call. They're both fantastic people. They know what they're doing, and that's why they are my experts for the day. So thanks so much, and we'll talk to you soon. Bye. Bye.
Bye.
Hit finish.